Wednesday, November 23rd, 2016, Monaco 64, home of alternative economics and contrarian views. I like to talk about a few things this afternoon. It's 3:20 London time, so about 10:20 a.m. Eastern Standard Time. So there's a few things, important things going on today. In the UK, we've got what's called the Autumn Statement. And I'll read here from Wikipedia. It says in the UK, the Autumn Statement is one of the two statements by the Treasury, Treasury, that makes each year to Parliament upon publication of economic forecasts, the other being the annual budget. So it's almost like a mini budget. And I think this is the last Autumn Statement. And from next year, the whole budget will be in November, but it won't be called an Autumn Statement anymore. And basically, the Chancellor of the Exchequer, who's the equivalent of Treasury Secretary in the UK, comes out and makes forecasts for the economy, for spending, and I'm reading here from the Telegraph, Autumn Statement 2016. Philip Hammond sets up 23 billion investment fund for innovation and infrastructure in first and last autumn speech. He's the new chancellor after Osborne. And a few of the viewers of my channel have asked me to do something on the Autumn Statement or the budget. And one thing I would say, that headline is misleading because governments don't invest, governments spend. So to say that the government is going to create an investment fund for innovation and infrastructure is completely bogus. Governments they don't make profits. If anything, governments run huge deficits, especially the UK government. So the headline should actually read 23 billion in spending, of infrastructure. And so what are the other forecasts? Well, it looks like, I'll read here. The Autumn Statement revealed that the Office for Budget Responsibility, which is an oxymoron, I would say, had downgraded growth forecast for next year from 2.2% to 1.4%. And they blame Brexit for that again. It says, as a result of the uncertainty caused by Brexit. Nothing to do with the fact that the UK economy has never recovered since the '08 crisis. But they're going to blame Brexit again. So the other thing that comes out of this is additional borrowing of 23 billion over the next 5 years is to be used to invest in infrastructure or spend. So so it looks like a few years ago George Osborne said he was going to hit a budget balance by 2015. And then he said, 2020, we're going to have a surplus. But now, not even in 2020, they're expected to have a surplus. So the deficit is going to be expected to be like 20 billion or something in 2020. So, and the another news that is not good for the UK is that the national debt is going to increase to almost 2 trillion by 2020, I think to 1.95 trillion. It was around 900 billion in 2010. So what do I think? Usually when they have these statements, they say, such and such group of people are going to benefit from the Autumn Statement. Such and such people won't, because they change all these little rules. For example, key points, no further welfare savings measures. So that means that they're going to keep spending for the welfare state up. Increase in personal allowance to £12,500 by the end of Parliament. increase in national living wage from £7.20 to £7.50 in April 2017. That's an increase in the minimum wage. So, there's all tomorrow you can bet, the newspapers will have big stories about this statement and say who's going to benefit the most, who's going to benefit the least. But it all goes in cycle. And what I would say about the autumn statement and the UK budgets and all the budgets for the major countries for that matter is that they're too big and they're too important. Government is too involved in the economy, micromanaging too much, taxing too much, trying to help too much because they've taxed too much. And in the end of the day, people always lose out. So for me, the best autumn statement or budget would be one that would be really short, like 5 or 10 minutes, and no one would care about because government wouldn't be involved in the economy. Government would be small. So all I have to say to people is really, it's not getting better, really. The government's still, the economy is still slowing down. Debt is growing. And now they're going to spend even more by calling it investment to try to increase productivity and infrastructure projects. I mean, we've seen how Japan has spent hundreds and hundreds of billions in the last 20 years in infrastructure projects, fiscal spending, public spending, and nothing's happened to the Japanese economy. The best thing that government can do is get out of the way and let the private sector take care of business and the economy. So that's what I have to say about the autumn statement. That's why I don't want to go too much into detail about it. I mean, the viewers in the UK, they can read about it in the papers, and there's a lot of little details. I think it's irrelevant in the long term. Yeah, you might benefit from the fact that the threshold for taxation has gone up a little bit, but then, they've raised the price of alcohol or cigarettes if you smoke, or it's all, let's see what else they've done here. They're going to crack down supposedly on real estate agents who are letting agents, rental agents, because they're saying that they're charging too many fees. So all these kinds of things. So the other thing is pensions tax relief loophole for over 55s will be closed. So that's going to hurt me because in a few years I'll be over 55. So, they take with one hand and they give with the other. That's what the UK budgets are all about. And in the end of the day, the debt keeps increasing and the people get poorer and poorer. So I wouldn't read too much into these budgets. One other thing I like to talk about, important thing today, is the bond markets, because we're continuing to see, we saw yields the last 2 days kind of stabilize a little bit, but today they're spiking back up. The 10-year yield is actually broken through a key level around 235. US 10-year yield, 2.35%. So we're now at like 2.39. Almost, I think we were around 230 yesterday. So up 9 basis points is big. The 30-year yield is at 306. So that's up about 7. 311 is the key level there. So I think the 10-year yield is very close. We're going to get to 2.5 very soon, probably next week after Thanksgiving. And then 3 will be the target. And that's a level that I think is really important. And I've done other videos before about it, and I'll put it in the information. And the other bond market that's not doing well today, not surprisingly, because we're going to have more deficits, more debt, less growth, more government spending, is the UK gilt market, UK government. The 10-year gilt today is up 11 basis points at 1.47%. So in August earlier this year, I think we got down to 0.5%. So we're up 1%, 10-year yield, which will affect mortgage rates in the UK, The 5-year is up 6 at 0.68. So, and the other thing, of course, I like to talk about is the gold market. I was out earlier today in the garden doing some work in the house, and I came in, and I see that gold has been smashed to smithereens. It's just, I don't know what to say. It's just, it happens all the time when the U.S. comes in, after, let's say, 8:20 New York time, or after 1:20 London time. They just smash it down, and now gold is at 1184, down 28. And the Dow, of course, is up, up 30 points, 19,053. S&P is down 1.3. Silver is down 44 at 1620. We've had good economic numbers for the U.S. Durable goods were higher than expected. 4.8% was expected, 1.5. Jobless claims was in line, 251,000. Manufacturing PMI was better, 53.9. So it looks like the Fed will hike in December 14th, but I don't think they're going to keep hiking continuously after that. It's going to be a bit like last year. The dollar is stronger today as well. Let's have a look here. Dollar index. We're right now 101.74. So yeah, it's very strong on the highs, multi-year highs here, up 0.75%. But it doesn't justify, the move in gold, for gold to be down 2.3%. I'm sure. Do you? When these things happen, I used to get angry about it and upset, but I've gone past that. The way I think about it is like, you look at the UK budget, you look at the underlying strength and health of Western economies. The amount of debt that's been created, and how low interest rates are. Granted that Treasury yields are going up, but when they're going up like that, do you really want to buy Treasuries? If the yields are going to keep long-term Treasuries, do you want to really buy them if yields are going to keep going up? Because that means your principal is going to go down, the price of the Treasuries are going to go down. So, I think that's what's happening. They don't want people to protect themselves. So what do? They bash gold because it's easy to manipulate it. They don't want people getting out of treasuries. But what can I say? So, not a great day for precious metals investors. So gold right now, 1182. Silver 1619, but I guess not a great day, but actually, if you look at it on the bright side, it's a good day because you don't need as much fiat paper, that is basically a piece of paper, to buy something that's like actually worth something tangible, and something that is valued and has been valued for 5,000 years. So all I'd say is, don't leverage, as I've said before in the past. Batten down the hatches and hang on. Gold's still up on the year, so this is temporary in my opinion. So if you enjoy my video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and also if you'd like to donate to my channel, there's some links below in the description. I accept Bitcoin, BitGold, PayPal, and also Patreon. I'll talk to you later. Bye.